Welcome back to the channel, everyone. Today I want to talk about why and how the short interest on AMC is currently being faked. I also want to go over the T+21 and T+35 cycles for the failed to delivers. Trust me guys, you do not want to miss this video, so stay tuned and let's make some money. I also have something really important to say. I've just found out from Twitter that YouTube is hiding all of the new AMC videos, especially from the search results. So guys, if you haven't already, please ding that notification bell so that you don't miss another video just like this one. Also be sure to drop a like down below and subscribe to the channel as well. And now I want to dive straight in with the key information. So, reading between the lines, know that they're using borrowed shares to reduce the short interest. No one would be borrowing AMC shares without using them to either sell and increase that short interest or to close their shorts, not buying to cover. Short interest will eventually read zero, yet shares on loan will eventually show 150 million. You may have noticed that the shares on loan from Ortex has always been staying fairly similar, around 90 to 100 million shares on loan. However, the estimated short interest has been rapidly falling. The exchange reported short interest fell from something like 80 or 85 million down to around 75 million, and the estimated short interest keeps falling. And that's because they're borrowing additional shares and taking them out on loan and using them to pretend that they've covered their short position. They're taking out additional shares on loan and classing them as buy transactions to cover or close their short interest, and therefore that's why the estimated short interest is consistently falling. But obviously this doesn't actually close their short position. If anything, they're just borrowing another share and therefore increasing their short position. Even though they haven't yet shorted that share, they still hold it as a share that's been borrowed. Therefore, they could turn it into additional short interest and sell the share rather than classifying it as a buy transaction to cover or close their short interest. Why are they doing this? Obviously to scare the apes into paper handing and selling their shares. Everyone from the get-go has been saying that we will sell our shares when all of the shorts cover. Therefore, the shorts and the hedge funds are trying to make it look like they're covering by forcibly reducing the estimated short interest and the exchange reported short interest. But if anything, what they're technically doing is obviously just borrowing one share and shorting it, and then borrowing a second share and pretending that they cancel out. But actually, they've just borrowed two shares, so if anything, they're increasing their short position. The original poster on Reddit also thinks he might be onto something. I think this one hit a hedgy weak point. Suddenly my DMs got flooded with shill accounts telling me I, an ex-financial advisor, know nothing about this and should stop posting. He also said it wasn't a mistake, and some of them he'd actually had prior contact with, and they said, can we pay you in crypto to post FUD for us back in January? Therefore, whoever's paying these shill accounts or these bot accounts obviously has just had their secrets exposed, and that Hedgies are actually trying to reduce their estimated short interest by taking out additional shares on loan. I also wanted to recap the July T+21 and T+35 trading cycles based off the failure to delivers that have occurred. I'm pretty sure we've got multiple DDs talking about failure to delivers and T+21 and T+35 cycles, so I'm not going to go in much detail explaining this. I'm going to try and speak in ape language so everyone can understand. June 18th, we had a large amount of call options expire in the money, especially at $40. Everyone was waiting on the gamma squeeze the following week, but nothing happened. This is due to the market makers' failure to delivering the option shares, also why we were on the threshold list. Usually it's T+2 from Friday's options, if not then it's T+35. T+35 means 35 calendar days from the trade date. 35 from June the 18th is Friday, July the 23rd, this Friday. Now the T+21 cycle is for liquidity purposes, and usually every 21 trading days these failure to delivers have to be cleared. They can cover before the 21 days, but usually they wait until the 21st. The next upcoming T+21 cycle is on Monday, July 26th. Like I said, they can always cover earlier, but the next trading day before July the 26th is on, Friday, July the 23rd, the same day as the large amount of June 18th failure to delivers. If they don't cover, then AMC will be back on the threshold list, and once again, Citadel will have to find someone to take their garbage or be forced to cover. So pay attention to what happens this Thursday, Friday, and next Monday. If we see some large green candles, then these fail to deliver cycles are still real. If not, then nothing has changed. Still diamond hand. The last couple of T+21 cycles were on June the 24th and May the 25th. Check out what AMC did then. If we actually go and have a look at those specific days, June the 25th wasn't overly special. It was just some small trading volume inside the candles of the previous few days. However, the 24th of May was special as it was the break of 1501. That was effectively the day that started the June run-up all the way to new highs of $72. However though, remember in June, AMC sold an additional 20 million shares, so take that into consideration. If you want to go back from May into April or March, then just count backwards 21 trading days and look at the price action. Here's a hint, the date range will be from the 23rd to the 26th. However, the poster on Reddit does preface it by saying that he wants to finally say that this does not mean it will squeeze or go to the moon. As we know, these kind of catalysts aren't 100% guaranteed to cause AMT to explode, they are just potential catalysts. Do not expect the mother of all short squeezes to start on these specific days. It's just a cycle for entertainment purposes to see if a thesis is correct. So remember July the 23rd and July the 26th and pay attention to the price action if you are one of those people that follow the line. If dates scare you, then ignore this post. If you've done enough due diligence, then nothing should scare you at this point. At the moment, we know that AMC isn't on the NYSE threshold securities list, but we also know that the Hedgies didn't really cover those failed to delivers, they just transferred them to a different broker. At the moment, it's been 7/8 days since AMC was removed from that threshold securities list, and by the time we hit Friday, it'll be 10/11 days. So wouldn't expect me if AMC soon comes back on to the NYSE threshold securities list. As the poster said, AMC will soon be back on that threshold securities list, and Citadel will either be forced to cover or they'll have to find somebody else to take their garbage failed to delivers. I've also spoken on the channel before about how those failed to delivers are transferred from one market maker to another, and it involves quite an expensive transaction fee because obviously Citadel will have to cover the other party's exposure risk. I also wanted to recap on the parabolic arch video that I made yesterday. Again, if you didn't see that because YouTube was hiding it from you, I'd advise going to watch that video after you finish this one. But if we have a look at the chart, AMC is set up very, very nicely for this parabolic arc, and it's had the big plunge, and now you can see that the explosion has started because of yesterday's very impressive price gain. However, if we have a look a little closer at this chart, we can see a slight pullback in the parabolic arc just here, so it wouldn't surprise me if we did pull back a bit, say to around $40, before shooting off again towards new highs. Guys, be sure to let me know down in the comments below what you think about the short interest in AMC being faked and the hedgies trying to scare us apes into selling our shares because they're trying to convince us that they've covered. Also, if you haven't already, I'd really consider checking out the Patreon and the private Discord, linked in the description below, and becoming part of the team. We talk about AMC and other stocks, sharing due diligence, news stories, and more. And as always guys, if you enjoyed this video, be sure to check out some of my others. Alternatively, subscribe to the channel and ding that notification bell, because that way you'll be alerted when I upload a new video. Cheers.